Good afternoon. This is Susan Shoemaker at Riggs Asset Management. I'm here with Bob Graham, President of Riggs Asset Management, and we want to talk about some of the moves that we've seen in the market and what's behind them.
Susan, as you know, we've had a pretty dramatic shift in the market and market sentiment this week. And if you remember, we had talked earlier about how this market's really driven by interest rates. As interest rates were moving higher and higher and higher, the market was coming under pressure. Well, literally, we saw a shift this week where inflation looks like it's coming down and it's moderating, more so than economists thought. And because of that, two things occurred. One, we saw a dramatic decline in interest rates. I think interest rates declined as much as 15% on 10-year yields this week alone. And with that, we saw a huge expansion in the number of companies participating in the market and participating to the upside, which is the best. So we saw very, very strong moves in smaller companies, mid-sized companies, and we also saw healthy moves throughout the large cap indices, not just a concentrated handful of names, but broad breadth across the equity markets. So improvement in the bond market and improvement in the stock market, really driven by expectations or the numbers that came in with lower inflation and the expectation that inflation will continue to moderate as we move forward.
And this is coming right on the heels of a fairly significantly positive earnings season.
Yeah, I would agree. In fact, you could argue, and I would, that we have probably seen the trough in earnings, and it looks like earnings are now are climbing back up. And so whether it's technology, whether it's even some of the retail numbers that are coming out are a little bit better than people expected. So pretty much across the board, companies have figured out how to make money in this environment and are managing through that process. It's a healthy sign for the U.S. economy.
What about the people that were in, we've been talking about throughout the entire year about the opportunities that there were in money markets. So you were being rewarded or at least compensated for being in cash. Do you think that cash on the sidelines may be something that people will turn to the markets to invest now, specifically the equity market?
I think you may see some of that. There's a lot of money sitting on the sidelines in money market funds. For certain types of money, that's 100% appropriate. But some of that money probably needs to migrate to the bond market, and probably some of that money needs to migrate to the stock market. And I think as you see returns improve, you'll see more and more of that migration out of, if you will, money market funds into other asset classes, whether that's stocks or bonds. So right now, it looks like we're setting up for a pretty good year-end rally and coming into what is historically one of the strongest periods of the year. December is a very strong month historically. January tends to be well. February's, soft, but really going into January, February, March, April, we're coming into a pretty strong period where equity prices tend to rise.
Terrific. That's good news. Thanks, Bob.
Absolutely.